Hello and welcome to the Property Talk podcast from RWinvest, bringing you tips and advice on all things property investment.
So today, Bradley, we're going to be talking about the advantages or the benefits of off-plan property. But I think before we get into those, we might start a little bit more generically and recap on what the benefits, or in fact, what off-plan actually is.
Yeah, I think that's fine. So off-plan property really is property purchased pre or during the build phase, designed with an array of benefits to clients that I'm sure we can get into later, but really it's purchasing a property exactly as it says on the tin based off the plans.
So it's not actually ready, I couldn't go and get in and see it, look around, it's hole in the ground in effect.
Based off the drawings, that's exactly what it is. Yeah, that's correct. Now again, off-plan can have varying degrees of how off-plan it is. You know, I would still talk about a property as purchased off-plan if I don't know, the ribbon's not been cut on the front door yet to allow people into the building. You know, up until that stage it is still an off-plan property, so from time to time you can get inside and view what is a shell or parts of a completed project. It will still be classified as off-plan, but it can be exactly as you say, a hole in the ground, pre-existing non-demolished site beforehand, right the way from inception stage right the way up until 24 hours before it finishes.
Yeah, and that is a common misconception, isn't it? People often think that off-plan is brand new building from the ground up, when it can actually be a refurbished existing building.
Completely, yeah. I mean, we deal with a lot of refurb properties that we would still classify off-plan, and I think certainly a lot of the benefits to it now are massively outweighing any of the drawbacks that were kind of historically there for them. So for me, I think it's an important part of property in general, and in particular investment property.
You think to yourself, well, I can buy a property that's ready, that might even be tenanted, it's going to give me money straight away. Why would I invest in something whereby I've got to wait 2 years to get any kind of returns? Why do people do it?
I mean, I can tell you a variety of great reasons why people do it. The two that immediately spring to my mind is developers, when they launch these types of things, they have to incentivize the clients to give them a reason to wait for their returns to come, maybe 12 months, maybe 18 months later, whatever it may be. Off-plan pricing, you know, everything that is purchased through companies like ourselves or other companies in the industry, when it's bought in the off-plan format, should be purchased at a significant discount rate from the list price when it's completed and tenanted. So we tend to aim for around about 10% below market value. Maybe we don't always hit it. Sometimes it sits at more like 7 or 8. Sometimes it sits like more like 12. And also that can creep down during the build as prices increase through the build phase. The second and obvious one to me is just having a pick of units in a building. You know, if you're buying a completed apartment, first and foremost, the person selling it is really going to be wanting to maximize their return from their purchase. They don't want to sell it at the rate they bought it for, that's for sure. When you're buying off plan, you should have the ability to have a pick of apartments in the building, not just the one that one person is specifically selling at that time.
To go back to that last point you made when you're talking about cherry picking an apartment in effect, are you saying that I can look at the plans, and if I get in early right at the beginning, I could say have a penthouse or a corner apartment, or I could go for best price per square foot and get something low down? That sounds like a massive advantage to me.
That's exactly what I'm saying. I mean, when you're coming into the very early stages of an off-plan development and you get sent, you know, some lovely fresh apartment breakdowns and talked through an availability list in a project, and there are 250 units out of a 300 unit project still available. You can get around the building, you can select your floors based on what's of preference to yourself. Maybe you want lower floors with lesser prices, maybe you want higher floors, something a bit more flashy. You know, it gives you the ability to really dictate exactly what you want from a building and have more chance of successfully landing it. Although, you know, depending on how popular the building is, you can't always guarantee it, but it just gives you a better chance to get something more exciting for yourself.
Yeah, definitely. Another one which crops up often is really the fact that, I don't know if you've ever lived in an old building, one that was built maybe 10, 20 years ago, but they're certainly not built to modern standards. And when you see one of these new build properties and you step inside, the level of not only insulation but soundproofing, the quality, it really does tell. Getting that modern build, that meeting of modern building regulations, the 10-year NHBC warranty or equivalent. I mean, for me as an investor, that would be really, really important.
that's something that I think is certainly underlooked when people are looking to purchase in this format. The amount of times I hear stories from clients who say, oh, I've never bought in this format before, but I have bought some existing properties in X, Y, and Z place, and we had an issue with, I don't know, leak in the roof, issue with whatever it may well be, and the property is out of structural warranty at that time. That's something quite scary. If you're coming in and you have a fresh 10-year NHBC or equivalent warranty on your property, for the next decade you can sleep easy every night knowing if anything does go wrong with your apartment, or let's say if you bought something completed and your survey's not been done correctly and they've missed something, you don't have any of the prospects of those headaches.
A big one for me, and again, this is often overlooked and maybe poorly understood. It's kind of linked to what you said right at the beginning about being below market value. But I saw some properties in a city centre location recently where the sold prices on RWinvest were around £220,000 for this given property type, and yet they were being marketed off plan only a year to go until completion at 170. So potentially, all things stacking up as they should, 50,000 in equity. Now,
sounds delightful.
Exactly. You think, wow, that's incredible. But when you look at the figures, you think, okay, I've got to put 170 in and I might make 50. But that's not quite the case. If you're buying off plan, often you don't have to put the whole value in right up front, do you? You put in a smaller amount. Is that fair to say?
Definitely, that's entirely fair to say. You would always go in with a lower level deposit value ahead of the purchase. Although not with everybody, we do see clients go full whack, but yeah, I'd agree with you.
So potentially you could be putting in 30, 40, 50%. So you're not even parting with all of your money straight away at the outset, and yet you might be making £50,000 in a year. So for me to be able to put in £50,000 and then make £50,000, the return on the actual capital invested, I don't know any other investment like it.
Something we see quite commonly, actually, funnily enough, kind of stemming on from that, is sometimes you'll see people who come in and they'll buy maybe 4 or 5 apartments on launch day of an off-plan site. If they know the site's going to be popular, they know the location's good, they know that the builder and the developer are good, and they're doing something where the scheme will end up being something fantastic and worth shouting about in a city, these guys will come in and buy 3 or 4, and maybe they only have intention of keeping 2, and they'll hit the completion date or maybe hit the assurance period, which is something else we should discuss for sure. And at that stage, they'll then sell the property and make those initial uplifts just on the below market value pricing. So it can be a nice way to make slightly quicker drinks as well, which is something that people don't always think about in the off-plan world.
Yeah, it sounds as if you're almost doubling your money and you're waiting 12 months. So to play devil's advocate, any of those people say, oh, well, I could buy a completed property and I could get a 7 or 8% return during that time, during the build phase. Well, that 7 or 8% return, it's never going to value up to £50,000 in equity, is it?
No, I'd agree completely. One of the other things that I think is well worth noting is, especially when you're buying in developing cities, if you're buying into cities under huge regeneration, which certainly you should be, it's how you make those initial big uplifts on the capital gains, is if you're buying near areas that are having facelifts. And for me, when you're seeing old, tired, completed apartments, and maybe it's been owned by an investor who can tell you, it's renting for £800 a month for a 1-bedroom apartment right now, but when companies like ourselves or other developers in the industry build 3 or 4 shiny new buildings next door or round the corner, is your apartment still going to stack up to £800 a month? One of the things I always think of is because tenants can be quite fickle, especially the kind of key city centre age demographics where you're talking to your 18 to 35s. These guys want the modern facilities, they want all of the extra bits and pieces, and I think older buildings, when you're competing with newer buildings, they're never going to stack up for rentals. So always another little advantage you can make is you can be in the most modern facility and have the best chance at renting for the highest possible value in an area.
You mentioned something interesting earlier where you said that sometimes you get people who might buy 3 or 4 apartments on launch day and they mightn't keep them. Now, what I find really interesting is the people who are doing this regularly, they understand off plan, they always seem to get in right at the beginning. Now, we know they're getting first pick of the apartments, maybe some pre-launch incentives, but is there something which happens between the start to the end, which means it's better to get in at the beginning rather than at the end? What would you say? Is it not worth just waiting until the week before completion?
No, absolutely not. These developers aren't stupid. These guys know the closer to completion they get, the more value they have in their apartments. The risk levels on purchase diminish completely down to null once you're a couple of weeks before the finished building. So these developers aren't soft, and they know this. The prices will start to bump up. You will tend to see pre any work starting, hoardings will go up and that's it. And then you're at an entry price Once you see a frame come out of the ground at that level, then of course the developers are going to start inching up, maybe 2% at a stage, then 2% at another stage. By the time you're a week before completion on a building, you're 10% below market value, might only be 2% below market value. So takes a little bit more bravery, a little bit more courage, and a bit more background checking and homework. But if you can do all of those things, it's the best possible way to squeeze every last penny out of your investment monies.
Yeah, so on completion, everything's equal. All of the apartments are the same. There's no difference in quality, specification, but the people who've gone in early got the best price.
That's exactly it. And they can then maximize that yield, because of course your yield will only ever be based on what the apartment is renting for versus what you've paid for it. Now, it's very, very easy to say, if you've got in early enough that you're paying, I don't know, 170,000 on a 2-bedroom apartment that's renting for £1,100 or £1,200 a month, if you're getting in maybe a month before completion at 190,000, certainly your apartment's not going to be renting for any more. It's the same apartment. You just squeeze those extra few pennies and pounds.
But I'm imagining that I'm an investor. My name's John Smith, and I turn up on site and I see the hole in the ground, and this is the best time to invest. I just think if someone said, you've got to part with £50,000 potentially.
What's the catch?
What's the catch? Yeah, is there something I should be doing? Am I paying for a field that may never get built? What do I do?
Look, one of the things we do as a business, we've been trading for a long time, and you learn who to work with in an industry, who not to work with. You do thorough background checks on every single party, from the sales agents to the developers to the management companies, and make sure you're happy that all of the pieces of the puzzle fit together. I think everybody has seen at some point along their ventures issues with developers or any of these kind of things, and we do as much as we can as a company to protect our clients from any of these issues, but they do still happen. So you have to make sure that you're working with the right parties, and doing due diligence thoroughly, I think, is important before you go into any business venture. It's always worth knowing who you're getting into bed with, should we say.
Yeah.
And so I think we always encourage clients to do their own. But the truth of it is they actually don't need to. Once they're at that stage with us, we protect our clients and wrap them as far in cotton wool as we can to make sure that they're not exposed to any of the risks that you can see in investment property in general, but also specifically in off-plan stuff. So I guess to try and give a fair reflection on this, I'm sure you can think of some of the drawbacks and negative experiences that may have happened to clients in and around off-plan. Have you got anything that springs to mind?
Well, there are many cases, but I think you hit the nail on the head. I think doing due diligence is key. Your first port of call's got to be with the agency you're dealing with. Speak to the agents, make sure they're reputable. You want to be able to Google them, check review sites, etc. And
the beauty of the internet age.
Yeah, exactly.
Everything is so much more transparent now.
Exactly, and then from there, you really want to be looking at the development specifically, and the developer, the people actually building the project. Because we've all seen it before. Wonderful locations, wonderful CGIs, but the developer's never laid a brick. I mean, would you be investing with someone who doesn't have a proven track record?
Absolutely not. One of the things that I know with our firm, and I would imagine for a lot of firms across the industry, is we won't work with a developer unless they have 4 or 5 examples of high quality completed projects. We're never going to work with a company that has never proven that they can deliver at this level before. We see it happen with some of maybe the smaller fish and people looking to come into the industry, whereby they're fighting for market share and have to try and push really, really hard to persuade people to buy into them. For me, I could never ever do that unless I've got examples of completed buildings and something to give me some comfort and some peace of mind that I can go to bed at night knowing that my funds are safe and secure going into a building and a development that's going to provide fruitful returns.
Yeah, so whilst you can't see the thing that you're buying because it's off plan, you should be able to see something else they've built before, see for yourself the quality.
Completely. Go to a show apartment, go to an old building that they've done previously. For ourselves, one of the things I think is really important when you're dealing with companies and people from all over the world, it's really important to make sure the construction updates are done properly. Look for examples of buildings they've finished and look for the construction updates on those buildings. Just go right through that journey with them, from some photos and some videos of a hole in the ground, maybe some drone footage over the site before it's taken place, and then watch the stages and the building blocks along the way. If a developer can't evidence those things to you, then you should never be putting your money with them. But it's something that we do very, very well, I guess, is our marketing team are great with sending out lots of the big construction updates, lots of drone footage, lots of CGI, lots of the fusion CGI with footage and with still photography to make sure that clients can see the journey from start to finish, month on month, every month. If you've bought something really exciting and you can't wait for it to finish, it can be quite enjoyable to watch that journey of it coming out the ground and going up in the air, and start to look at the photos, to look which ones of the windows along the lines are going to be your prospective windows that you've purchased, and these kind of things. I find it quite an enjoyable part of the journey, actually. What do you think?
Yeah, I wouldn't disagree with you, not at all. Thinking about the due diligence, I mean, you've done your due diligence on the agent, you're happy, you start to look at the developer, and then it's quite clear that, you know, in any profession, in any trade, not everybody's equal. Some developers are better than others. Now, you do see a divergence where some developers seem to build their own developments. They actually are the contractor, they're the construction team, and others outsource it. Would you say there's a particular one which is better, an advantage to having, say, a developer who actually builds their projects himself?
Certainly, it's nice to have total control, I guess. You know, if you're not in a position where you get that, which not everybody is in the off-plan world, you know, some developers are fantastic at managing the money and the cash flowing through a project, but maybe don't have the plumbing expertise internal that they maybe need to outsource it, or whatever it may well be. Again, just make sure your due diligence is done properly. Make sure you've looked around at the parties they're involved with, the people who are going to be doing the building. Ask the right questions. At the end of the day, if you don't ask, you don't get the answers. So ask your sales agent, you know, okay, is this developer going to be building it themselves? Are they subcontracting anything out to anyone? How much can I rely on that information? And, you know, just cross every T and dot every I, and make sure you feel comfortable ahead of putting your funds into place. But a good sales agency should be able to provide you with answers to all of those questions at a level that will make you feel comfortable.
Yeah, so we know the developers solid. We've checked their track record out. We've found out who's actually doing the building. We've checked their track record. We know they've built before to a high level, to a good standard. Going back then to the financials, we see a lot of developments whereby they ask for small deposits. They'll say you only need to put 5% down now, 10% down now, and others where they want, you know, up to 50% or 75%. Now, you know, as a risk-averse investor, it seems to me as if it might be better to put less down, but that's not necessarily always the case, is it?
It can work both ways. I mean, if a developer is going to be cash building a site, the funds are already in place to build, fantastic. Put your 10% deposit down to get the unit off the availability and proceed and move forward. I quite like that sweet spot in the middle at kind of 30, 40, 50% down, whereby you know you're putting enough money in, and so are all of the other people involved in the purchasing process, that there's going to be enough money in the kitty to build the building, along with maybe some bridging finance or you know, whatever it may well be to pull everything together. But for me, at 10%, it just screams, where's the money coming from to build the building? At that stage, go to your developer and ask them the question. Okay, that's fine. You only need 10% from me. Where's the rest of the money to build the building? Because you're certainly not building it for 10%. You know?
No, that's true. That's true. So you could end up in a position whereby you have to wait for the whole development to be sold out before construction work starts. So all of a sudden your 2-year build can end up 3 years, 4 years, 5 years. So are you saying that it might be better to put a little bit more down so that the build can progress and work can start
100%.
sooner?
Like I say, if you're confident that the builder is going to build this building no matter what, I mean, nobody wants to lose money at all, full stop. So whether you say, oh, I'm nervous about putting 30% down, you know, I'll just put 10% in. You know, does anybody really want to risk 10% of the cash value of a property? You know, I think you'd be crazy to. So for me, I think if you're going to do these things and you're going to be comfortable enough to put 10% in, you should be able to be comfortable enough to put 30% in. It should make absolutely no difference. And then at least you know, like I say previously, the money is there in place, ready for them to get building, and make sure it's not going to be a long, drawn-out process and your product isn't going to be delivered late, you know?
Yeah, that's a fair point. I suppose if you thought there was any element of risk at all, you wouldn't put a pound in, let alone £10,000.
Yeah.
Well, I think we've pretty much covered the benefits and the advantages of off-plan property. I certainly think that if I was investing again, that's exactly the type I'd be going for.
All of it comes down to due diligence. It comes down to working with the right agencies, with the right developers, with the proven track records, and making sure that you feel safe, confident, and happy that your money is housed with the right body to deliver the goods.
So thank you for listening to the Property Talk podcast with RWinvest. If you have any questions or you'd like to get in touch, all of our details are in the pop-up at the bottom.
Thanks for listening.